Welcome back to Sora Trades. This morning, Tesla is trading robustly around the 442 level in pre-market hours, continuing to demonstrate strength following last week's breakout. The story Tesla is telling us is quite compelling. The current momentum presents an opportunity for bullish continuation, provided the key levels hold or give way strategically. Right now, Tesla has been on a tight upward trajectory, respecting the Bollinger Bands, 15-minute, while making steady progress through key bands of Fibonacci resistance levels. Price is currently pre-market 442 and showing bullish momentum. Here's what matters for today: upside targets and momentum path. The immediate upside target sits at 444.30, a clean technical level where a test appears increasingly likely given the prevailing momentum. Should this level breach convincingly, an overshoot toward the next Fibonacci confluence at 439.84 and 440.93 becomes probable, though not guaranteed. If Tesla manages to hold above 444.36, it would signify a notable shift in sentiment. At this point, the sky clears with the next upside milestones extending toward 450 and potentially 456, where longer-term resistance may emerge. For traders watching Tesla's price action closely, pullbacks to 437 and 431 represent compelling opportunities for momentum-based dip buys. Here's the rationale. The 437 level. This aligns with a significant Fibonacci confluence near 436.11, a level that has previously demonstrated structural support. Retesting prior breakout areas, in this case 437, often signals strength in an uptrend as buyers step in to defend the upward momentum. A successful hold here reaffirms bullish continuation and offers traders a clean, lower-risk entry. The 431 level, around 431.70, we encounter key short-term technical indicators, including the 20-period moving average on the 30-minute chart. In strong uptrends, the 20-period MA acts as a dynamic guide for buyers. Pullbacks that stabilize here often attract bulls looking to position for the next upward leg. Both levels serve as critical tests of Tesla's strength. A hold above 437 confirms immediate bullish sentiment, while a deeper retracement toward 431 would still preserve the broader uptrend structure. Should price action dip below 429, however, a reassessment of lower support zones becomes necessary. The play: focus on probabilities buy zones. Watch for dips to 437 and 431 as key entry opportunities. Upside targets: initial target at 444, followed by 450 and ultimately 456 if momentum persists. Risk management: a stop loss below 429 ensures disciplined trade execution. 431 level. This coincides almost perfectly with the key Fibonacci confluences of short-term rising averages at 431.70. The 20-period MA acts as a short-term trend guide. In strong bullish trends, pullbacks to this moving average often attract buyers looking for lower-risk entries. Combine that with the pivot-like structure around 431, visible on recent price action, and you have a solid area of confluence for support. 437 is where buyers should defend the uptrend. 431 is where stronger dip-buying bulls may step in if the move retraces further. If either level holds, it sets Tesla up for another leg higher, targeting 444, 450, and beyond. If those break, then we reassess lower support. The big picture weekly and PNF chart. PNF chart, breakout, target 727. Tesla's point and figure chart is showing a bullish price objective of 727. This target comes from a long tail up breakout pattern, a classic continuation signal of strength. 727 is far, but with Tesla's recent momentum, it's starting to feel in play. Weekly chart confirmation. Remember the top of the channel we discussed at 458? Tesla just smashed through it. Closing above 463 is critical and sets up the next push to 475 and T100 in the short term. Zooming in, the daily setup. Strong channel support. Tesla's trend is textbook bullish, hugging the upper channel line with volume backing the breakout. If we see a dip, I'd watch the 443 to 450 zone as a buying opportunity. Momentum plus structure equals liftoff. RSI is elevated, but with this strength, Tesla could stay overbought for longer than people expect. Combine that with this bullish PNF target of 727. The 500 level could hit sooner than Friday. What's next? 500, then 727? Short term, eyes on 475, followed by 500. Long term, that 727 target is no joke. Tesla's trend and structure support this extended upside. The 444.25 pivot level is an actionable resistance point on the 30-minute chart. This makes it a logical target for short-term traders to lock gains and for sellers to test the waters. If price rejects 444.25 and begins a pullback, the Fibonacci retracement levels, 38.2% at 405 and 50% at 391, will be even more significant as buyers look to step in. Wave structure confirmation. Should this hypothetical 444.25 level act as the peak for this leg, it may complete a wave 1 or smaller degree up move, reinforcing the likelihood of a wave 2 pullback. A retracement to the 38.2%, 50% zone is textbook behavior for a bullish continuation setup. Context of the trend, alignment with multiple timeframes. The 30-minute pivot aligns beautifully with the Fibonacci levels drawn from a possible 444.25 swing high, supporting a clean continuation structure. Holding above these retracement zones would keep the overall bullish narrative intact, especially given how price has been respecting short-term averages, like the 20 SMA. The setup. If 444.25 hits and rejects levels to watch 405, 38.2% fib. This shallow retracement is where aggressive buyers often enter. 391, 50% fib. Deeper pullbacks often attract institutional buyers. Triggering support. Monitor price reaction at these levels on lower timeframes, like the 15-minute chart. For bullish confirmation, look for volume spikes, hammer candles, or reversal signals. Upside targets. After a bounce, first target 437, prior breakout level. Next target, retest of 444 to 448 with potential momentum carrying toward 452. It's all about stacking probabilities, and these levels give us that edge. If the RSI makes a new high above the peak from 6 weeks ago at tomorrow's open, here's the likely takeaway. A new RSI high above the November peak eliminates the 6-week negative divergence. This signals that the momentum is not only keeping pace with price, but strengthening as Tesla pushes higher. If price clears resistance levels like 444.36 and 448.42, this fresh RSI high provides confirmation that buyers are still in control. Trend strength, high RSI and strong trends, even into the 80-plus range, is not bearish on its own. It reflects strong buying interest that can sustain for longer than anticipated. Next resistance focus, immediate levels to watch, 444.36, 448.42. If Tesla clears these, look for an overshoot to 452.50 or higher, with 500 or so being the next significant swing high target in this anticipation of a third wave of a 5-wave structure. Bottom line, if RSI makes a new high tomorrow, bullish continuation becomes the dominant theme, invalidating the earlier divergence concerns. Watch for a move through resistance zones, 444 to 448, with momentum supporting price. If that holds, the next stops are 450 and 450 as we eye higher levels. After a big move like Friday's $18 gain, a day of sideways or choppy action is highly probable. Here's why. Profit taking. After such a strong run, short-term traders often book gains, leading to pullbacks or range-bound price action. Market absorption. Large moves typically need consolidation to build momentum for the next leg higher. Late cycle behavior. Especially late in a swing or near resistance, breakout strength can weaken. If price blows through 445, if 445 becomes a reality and price holds above it, the game changes. Next target, the 15-minute pivot at 450 to 451 becomes critical. This aligns well with your idea of a Fibonacci extension beyond Friday's move. Extension levels, a 38.2% extension of the previous 18 move, Friday's gain, would add about 690 cents, putting us near 451. A 50% extension would add $9, which gives us 454. So the 450 to 454 range becomes a natural area to watch if price blows through 445. Recalibrating the Fibonacci levels. If we break 445 and set a new swing high, we'll need to re-pull Fibonacci levels from that new peak to assess pullback zones. But until a swing high is confirmed, we can't anchor new fib levels yet. For now, here's how to simplify it. Watch for 445 as the line in the sand. Above 445, Look for extensions to 450 or 454, below 445. Friday's move retraces to test prior support at 437 or 431, where the 20 SMA aligns. If price fails at 445, your current fib retracement levels, 405 to 391, remain valid, as they represent institutional buying zones on a healthy pullback. Statistically, most wave 1s are proportionate in duration and size compared to prior cycles. So, and I realize, momentum is strong, but the odds are favoring a wave 2 to materialize soon, which would see a 39 to 50% retracement before the next leg higher. We can't predict it, but we can anticipate and be prepared if price conforms to Tesla previous wave structures. If wave 1 continues much higher, above the hypothetical 444.25, it could trigger fib extensions to 450 to 454, and potentially lead to a shorter wave 2 retracement, since strong trends often correct shallowly. The upper trend line aligns perfectly with your 458.58 level as a natural completion of this extended wave 1. Given the confluence of factors, this zone acts as a technical ceiling, which makes 453 to 458 a strong candidate for a pause or correction. The 450 psychological level might magnetize price, but also create resistance. Momentum. Price has surged far above key moving averages, 20 and 200-week MAs, suggesting near-term overextension. Why the 458.58 zone? It matches long-term channel resistance, completing a clean structure. If wave 1 is nearing completion, a retracement wave 2 becomes increasingly likely. Historically, wave 1 extensions of this magnitude tend to peak in areas with channel or fib confluence, and we are seeing this reflected here. While this current wave 1 feels extended, it is still well within the realm of plausibility since it remains shorter than the prior wave 3. If wave 1 concludes at 458, it respects this fundamental rule and maintains proportionality. If the wave 1 extends to 458, I'll recalibrate this at that time in real time and apprise members when we do this as it happens. By the dip, first time tests only. This wave count will be recalibrated once we have a confirmed wave. 1 completion, 38.2%, 414.7. Likely a first real test of support. Institutions often step in at this level, especially after extended wave 1 moves. 50%, 443, a textbook retracement zone where buyers often reload for wave 3. 61.8%, 386 and 79. Deeper pullback but still maintains bullish structure. Critical support. Momentum. The current parabolic momentum gives room for one final push higher into the 450 to 458 range. This is consistent with channel resistance and psychological levels. Wave 2 expectations. If momentum remains strong, we may only see a pullback to 23.6% or 38.2%, 430 to 414. Should we lose momentum, the 50% retracement at 400 aligns as a solid target, while 61.8%, 386, serves as the line in the sand for bulls. Tesla's price action is on fire, and this 727 target just added more fuel to the rally. Are you buckled in for the ride? Let me know in the comments below. Hit that like button, subscribe for more updates, and let's keep locking in those levels together. See you soon, and let's keep crushing it.